What's up guys, Kevin Cage here with another crypto update. Hope everyone's doing well. In today's video, we're going to be reviewing the Dor Traffic Miner from Constellation Network, where you're providing data and you can earn crypto. So we'll talk about this from a retail standpoint, but then even business utility and Web3. And as we know, data is the true gold in this new economy and the reason why companies like Google are at the top. And data will only become more valuable as technologies like AI and these large language models improve. So in today's video, we're going to go through 1, the DAG tokenomics and the utility of the network. 2, we're going to dive into the DTM devices and their application. And 3, we're going to discuss the DTM rewards, the earning potential, and do a break-even analysis for both the foundation and the light across the board and see, is this even worth it? I hope you enjoy this one and be sure to watch the entire video. All links can be found in the video description and in the pinned comment. And if you're a business owner or know businesses with retail locations that could benefit from foot traffic analytics, be sure to stick around because there's some interesting info. Remember, nothing shared in this video is financial advice. I'll provide all links and resources that I review in this video in the video description, and I'll do my best to share accurate information along with my personal opinion on the matter, going over the pros but also any concerns I have. The world of crypto is extremely volatile. Yes, some assets could skyrocket like we see every cycle, but they can also crash to nothing. And that's the roller coaster of being in an emerging asset class. So please always do your own research, and I hope this video can serve as a great starting point for anyone interested in earning crypto with a DTM device. The real earnings from these devices are when they're deployed in multiple retail locations for businesses. So we'll dive into all of this and let's kick it off. Okay guys, we're going to start off going over DAG, the native token of Constellation Network. So there are a variety of different types of DLTs such as blockchain, but there are also DAGs, which are a directed acyclic graph, which are a lot more scalable than a typical blockchain like Bitcoin. And just like for most DLT networks, the more activity, the more transactions and utility on the network, the better it is for the token. The more metagraphs that launch on the network, the more utility the DAG token will have. And by holding DAG, you can participate in the generative economics of the network and support increased bandwidth in various ways, validate data, secure network utility, and provide liquidity. We got some big news for Constellation Network back in May, with an approval and executing US Air Force Phase 2 blockchain contracts. So Constellation Network completed their Phase 2 contract with the Department of Defense. Is one of the first blockchain companies to ever complete a direct to Phase 2 government contract. This marks a major milestone to have been validated and approved by the Department of Defense through the Air Force Research Laboratory as a scalable, secure, and defense-approved blockchain demonstration. And to better understand DAG, you can visit constellationnetwork.io, go to learn, go over core concepts or tokenomics. To better understand the network architecture where the hypergraph transfer protocol serves as the layer 0 or the foundation, which makes the hypergraph a true layer 0 protocol. And then from there we have the metagraphs operating on top. So whenever we say metagraph, think of a metagraph as a sub-network layer within the larger blockchain ecosystem. And metagraphs act as a framework or a lens where businesses can organize and present their operations. And a huge benefit of a metagraph is the ability to provide transparency into a company's operations, all of the transactions, and all of the data. And this is far beyond just financial aspects. This could be referring to operations for data collection, inventory management, sales partnerships, etc. So these metagraphs enable businesses to showcase their value through transparent and verifiable data. So DAG holders, or those that stake in a metagraph, can support a company's growth by validating metrics and participating in the network. So by staking and providing bandwidth to validate all of these metrics, you're also rewarded. So in terms of real-world utility, metagraphs, these subnetworks can connect a blockchain infrastructure to real-world commercial value. And this allows for the tokenization of real-world assets. And unlike traditional blockchain models that have static rules that can't be changed, metagraphs allow for the creation of dynamic business logic. So incentives and rewards can be aligned with real-time business performance and operations. And really quick, to look at the DAG price chart just to see how it's performed over the past few years. So friendly reminder, since March of 2020, it has done over a 100x. Even since early January right there, when Bitcoin is pushing into a new all-time high price, we can still see we did over a 70x. My first big position in DAG was at 1.47 cents. This was posted online as well, so right around there. And it was actually after this golden cross on the weekly 821 EMA and the weekly RSI started rising. I saw a variety of assets popping off. Bitcoin is at an all-time high price, clearly in the next cycle, so I took a big position and got a nice ride. And just to be frank, this is my personal preference and this is right for me. When I've already seen an asset from the cycle low to the cycle high do over a 100x, I'm actually looking elsewhere for returns. And this is not to say that DAG can't perform very well in the future. The potential is there if we have more metagraphs and utility on the network. But as I've shared on YouTube over the past few years, I put a lot more holdings into other assets that have not seen a 50x or 100x last cycle. And that's just right for me. My personal DAG holdings today are actually pretty low. Now, if we really zoom out and look at the DAG price chart and all of its historical data since 2018, this is on CoinTrader, we can see from March 2019 to its all-time high, it did over a 400x return already. And its all-time high market cap was roughly 570 million, so it never even hit $1 billion market cap. Its market cap is still low, so it does have upside if it did reach a multi-billion-dollar market cap like other assets have done. And just to emphasize how well the DAG price chart has respected the Fibonacci last cycle. So from high to low, we did a perfect 4.236 Fibonacci extension, additional wicks on the 4618, came all the way back down and back tested the 100% retracement. Even during the bull run, we saw a 70% crash before continuing higher. Now, if we do the same thing and just draw another Fibonacci retracement from the next swing high to the low, we can see the same thing occurred. So we can see a wick up to the 4618 and then candle bodies on the 4.236. So we know last cycle when Bitcoin is pushing into an all-time high price, DAG was a great performer. Now this cycle we have a weekly fair value gap or a sell side imbalance right around 12 to 15 cents. We have seen other assets like AVAX or Avalanche already cross through this level, but I just wanted to share that imbalance that typically acts like a magnet with price action, especially if Bitcoin were to reach an all-time high price. The all-time high price for DAG was roughly 46 cents, and even just drawing another Fibonacci from the swing high to the cycle low thus far, we can see that weekly fair value gap is right around the 236 Fibonacci retracement. So far in this market, as Bitcoin's pushed up, a variety of assets are getting some volume and doing a bit of a retracement, which is great to see. I just wanted to emphasize that weekly fair value gap or that sell side imbalance. If you believe in DAG long term, we have to break through this previous high around 12 cents. Until then, all of this price action between 2 cents to even 12 cents is noise. Next up, we're going to run through the supply and tokenomics for DAG to look at its price potential at a variety of market caps considering the circulating supply and the total supply. So on the DAG Explorer, we have the accurate numbers, so I'm just going to paste this into the template for the circulating supply. And current price today, we'll just say 6.4 cents. So the all-time high market cap for DAG was 570 million. If we were to reach a 570 million market cap with the current circulating supply, DAG would be roughly 19 cents. Today, DAG's market cap is just under 200 million, so still just shy of $1 billion. It would be a 5x to get to a $1 billion market cap. So I always consider this for every asset I look at. So a $1 billion market cap would be roughly 33 cents. A $3 billion market cap would be $1. Now we can also consider the full supply or the total supply of DAG. We actually have just around 80% in circulation, so it's not like any crazy amount is going to be dumped on the market like we've seen for HBAR. And here are a few screenshots of Constellation Network highlighting some projections for the IoT market reaching 600 billion in 2026. AI is also expected to have a 20-fold increase, and then even global big data, 160 billion. So I went through a lot of this because I haven't kept up with DAG as much as I did in 2021. I guess my biggest concern for the future of DAG is how many metagraphs do we have today, and is that going to be growing? So here are a few customers. We have the DoD and the federal use case. We have Dor, GenEco, Alchemy, BioFi. I guess what I really want to see to ensure that DAG does have long-term success and doesn't fail is we need to see dozens of applications leveraging metagraphs on Constellation Network. So the potential is there for DAG if we considered that success case considering its current market cap and where other assets have gone in the past. We know Cardano last cycle reached a $99 billion market cap, which would be insane, but just realistically looking at DAG achieving a $1 billion market cap or a $3 billion market cap and hitting $1 in the future, it's possible. It's not something we haven't seen before, so I can't rule it out. And per this, let's see, the federal update video on Constellation's YouTube channel, and a lot of the financials with this federal contract are private, so I don't have any insight, or us as DAG investors, we don't have any visibility into the health of the ecosystem or even funding for the future. So that's where it gets very speculative, and there's still unknowns, so nothing's guaranteed. Okay, now let's talk about the Dor Traffic Miner, the DTM, and its application. So last month, Constellation sent me the DTM Foundation device as a thank you for covering DAG a couple years back. They didn't ask me to make a video review, but I figured I would because I've had several people ask me about this DTM miner since it launched. And it's a really interesting use case with Web3 applications specifically for businesses with retail locations. So we're going to review both the Lite and the Foundation. These are linked in the video description, and these are the earnings that they earn per day. So the Dor Lite right here, this is the cheaper version. This earns 90 Dor tokens per day. And the Foundation DTM, which is more expensive, earns more Dor, but then it also earns DAG. So it earns 2 times more Dor tokens per day than the Lite version, but it also earns approximately 150 DAG per day. So be sure to stick around because we're going to do a break-even analysis to see the number of months or how long it would take to break even and make this profitable. And if you'd like to take advantage of the 20% off holiday sale this week, this is linked in the video description. And as we scroll down, we can see the Lite version and the foundation device. So the DTM Lite is typically $500, but for this holiday discount, it is $400. And the foundation device, which is a lot more expensive, typically $5,500, is $1,000 off. Using discount code kevincage will get you an additional 4% off. And the same thing for the foundation DTM as well. So we're going to run through the rewards on a daily basis, look at different price points, and see how many months it would actually take to break even with the current price. I want to provide as much information as possible so that you can see what's realistic, what's the success case, what's the failure case, and just decide what's best for you. And yes, any person can get either the foundation or Lite and even put it in your home, but the biggest money-making opportunity is the retail analytics. So if you're a business owner or you know other retail businesses like clothing stores, grocery stores, electronic stores, furniture and home goods, a bar or a cafe, the commissions you can earn with the retail analytics are pretty big. So high level, the Dor Traffic Miner, or DTM, is the world's first thermal sensing people counting data miner. So you can set this up in any retail location. It's super easy to set up. I actually set it up in my office. There's no camera, it's just a thermal sensor, and it can sense how many people are entering the room or leaving the room. So this DTM is a battery-operated hardware device. I actually have batteries in mine, but you can also plug it right in and then you don't need batteries. And you can place it on any doorway. It's super light, you can just peel and stick. And as the DTM collects foot traffic data, it pays you in crypto rewards. So the DTM device is acting as a light node. And you can easily mount it on any doorway, and it comes with the Dor application. When you open the box, you can just scan the QR code for your iOS or Android. So the DTM device collects the data and assigns it to the Dor metagraph and then to Constellation's hypergraph. Node operators and data providers, or DTM owners, receive rewards for their respective contributions. So on explorer.getdor.com, we can see the Dor Metagraph Explorer. And we can see active sensor nodes today. So this Dor token is newly launched, it is super volatile, and the market cap is incredibly small. So having this small of a market cap and just being launched, there's a lot of unknowns. Now the ROI potential with a success case to a $10 million market cap or a $50 million market cap is insane. But we need to see the Dor metagraph growing and have utility to actually drive attention towards the Dor token. The Dor token utility includes the managed fee requirements for network usage, attract and incentivize a worldwide community of datapreneurs, those who collect and monetize data, so allowing us to do it via Web3 instead of just the large companies like Meta and Google. So Web3 is allowing us to not just own, but also get paid for our data. Required to host a node to validate the data collected from the DTM device, support hardware and software tools for real-world data collection, and provide exclusive access to device management tools, future hardware discounts, and gated forums. So I'll link the DTM documents in the video description. We have the white paper, you have commissions. We can come right up here and then just scroll down to hardware. And it gives you a bunch of information on the specifications going between the foundation and the Lite device, and then even setup. So setting up the device is super easy. You get your device, you plug it in via USB or put in batteries, and then you just connect it with your mobile app. And the mobile app takes you step by step. You don't have to be super tech savvy. It's actually really easy to use. And you can also submit a support ticket at any time. I did submit one and they got back to me within 24 hours. So let's finish up today's video to do a break-even analysis, look at the daily earnings and decide, is this worth the investment? Could you make money from this? So let's input the current prices for DAG at 6.5 cents, and then Dor is just around 3.1 cents. So we're going to start with the foundation because this earns DAG and Dor. So current price of DAG, current price of Dor, the number of Dor tokens you earn per day, and the number of DAG tokens earned per day. And I'll link this in the video description. This highlights the rewards programs that are available for the DTM device, including the commercial application, the DTM installation, and the DTM baseline. And there's also Dor node operator programs open as well. And considering the current price of DAG and Dor, and both of these assets could be pretty volatile, especially Dor, with those prices, the total monthly earnings would be about $459. So considering the device cost for the foundation with even the max discounts and the 4% off right there, and considering the monthly earnings, it would take about 9 to 10 months to break even. Now, of course, if you think DAG goes back to 20 cents, your break even goes from 9 to 10 months down to 4 months. And the same thing for Dor if it did very well. So the potential is there to break even pretty quickly if DAG does very well in the next bull run. I think anything under 6 months is impressive. But what happens if DAG crashes back down to 3 cents and then Dor crashes down to 1 cent? I'm just playing devil's advocate. This would take just under 2 years to break even. Almost 23 months. Now let's look at the Lite version. This is the cheaper model. You are earning 90 Dor per day, but you're only relying on the performance of the Dor token. So you're earning 90 Dor tokens per day. This goes right to your Stargazer wallet. That's linked in the video description as well. And that's what you'll see in the Stargazer DAG wallet right there. So with Dor at its current price at 3 cents, how long would it take to break even? We'd be making monthly earnings of $83. And considering the cost of the DTM Lite after the 20% off and the code kevincage, it would take about 4.5 months to break even. That's pretty good, but remember, this is very reliant on Dor actually holding its price. Now sure, if it goes back up to 20 cents, you'd break even before month 1 was over, making $540, 0.7 months to break even. So if Dor takes off, yes, it's totally possible to break even in a month or two. What if Dor crashes to 1 cent? If Dor absolutely crashes, goes to 1 cent or near zero, it would take over a year to break even. Now looking at Dor's current market cap, it's super small. If you think this use case actually takes off, they get a lot of locations and commercial businesses leverage this could easily go to millions of dollars in market cap. A 10x would take it to only a $5 million market cap, and then a 100x would take it to a $50 million market cap. So if Dor does actually succeed, reaches multiple millions of dollars or dozens of millions in market cap, the ROI from these miners could be huge. But I don't want to be all hypey, we have to be aware of the risks. If this project fails, this is pointless. So overall, I just wanted to share my thoughts. I wanted to give that intro to DAG because it's been a while since I've dove into it. Just wanted to talk high level about the network itself. I think there are a lot of DAG community members that already have some of these light nodes and are interested in having some. They already are familiar with the Stargazer wallet, so it's an easy setup. And if they believe DAG does see long-term success in more metagraphs and applications, then absolutely it could go to an all-time price and the earnings could be big. But the question we have to ask ourselves is, are we better off just investing in the crypto asset itself and waiting for it to do a multi-100% move? Or do you want to be a datapreneur and have a light node or a foundation node to actually earn those rewards as well? So I think it really is case by case in this market. It depends on each person's personal preference and their goals. And of course, their risk appetite. And the final point before we call it a day is this, the retail analytics subscription. This is going to be launching in January. This is where the real earnings and the utility can come from for these DTM devices. So a unit is deployed at a commercial location like a cafe, a bar, anywhere where you measure the foot traffic. And whether you're the store owner or you go to other businesses and retail locations and sell them a DTM, the unit is then put at that commercial location or that business where they're measuring foot traffic and they're being billed for the retail analytics subscription. So the retail analytics subscription, or the rich data from the actual Dor Traffic Miner, is $100 per month. So if you own a commercial location or a small business that could measure foot traffic and you have the DTM device, or you sold the DTM device to a store, and they pay just $100 a month for the retail analytics of the DTM to make better decisions, for having the retail analytics subscription, you receive 25 Dor tokens minted for every $1 that's billed. So if the retail subscription is $100, 100 times 25 Dor tokens is 2,500 Dor tokens per month. So right now that's around $80 per month. If you got multiple stores and multiple store owners doing this, it could be a lot more. Or if the store owner just pays for the analytics $100 a month and he's making 80 back, he's really just paying $20 a month for the analytics. Now if Dor does a 2 or 5x, which it can because it's super volatile, those Dor rewards are also huge. So definitely keep tabs on this retail analytics subscription. This is going to be the true utility of the DTM. But alright guys, I hope you enjoyed today's video. I know there was a lot of information in this one. I feel like I still didn't cover everything. So I provided all additional links in the top of the YouTube video description, breaking down the white paper, the rewards, the setup, etc. And if you're a DAG investor or a business owner that could benefit from a DTM device to measure foot traffic, you can use the link in the video description. The holiday discount that's live right now is 20% off, which is a big deal. And then you can use the code kevincage for an additional 4% off. Thanks for watching guys, and I'll catch you in the next one.